All right, Vinney, are you there?
I think he's frozen.
Oh, geez. Vinny's having some internet problems here, but let's see if he comes back here shortly. And he's going to log back in. Give us 1 minute, guys. Always technology problems.
I know.
I told him he needs to just because he lives out. It's just where he lives. It's like he just doesn't get. He's surrounded by mountains, hills.
Mm-hmm.
He's just not. He needs to hardwire into his system, I think, because
Yeah.
You're. So what's the Austin weather like right now?
It's actually pretty nice. We had a lot of rain the last few weeks, and we went from 90 we went to 60 one day, like drop in 35-degree temperature drop in one day. It was pretty insane, but it's back up warm, 80s, 70s, 80s, pretty pleasant for Austin.
And it seems that you're getting. I was in California. Now I'm in Las Vegas. I moved to Las Vegas about 11 months ago, but it seems that Texas is getting so many transplants right now. I mean, it seems like everybody I know is moving to Texas.
Yes, huge amount of influx and migration of people, and I think partly what I was reading was, just the whole COVID migration, because there's a lot of people who are living in San Francisco, densely populated like New York, and they are migrating to less densely populated cities like Austin. So yeah, and I read the statistics somewhere. The most U-Hauls that were rented in post-COVID season were from San Francisco the Bay Area to Austin.
Wow. That's why it's interesting when you go one way. Like when I moved my U-Haul from the San Francisco Bay Area to Las Vegas, and then I checked the price. If I were to move from Las Vegas to San Francisco, it was like double the price to move out of California, because everybody's moving out and nobody's bringing trucks back in right now.
Right.
Right. I know some real estate investors, and they like look at those stats, right? I mean, that's a good way of looking at like where are people moving. I think we're getting some influx of Californians, obviously, here to Nevada, Arizona, Washington, and Texas and Idaho seem to be the states that most people on this side are moving to. Obviously, people on the East Coast are probably moving to Florida, but also people are moving outside of like San Francisco right now. People are like just getting out of there, and some of them aren't moving out of the state, but what they're doing is moving into the suburbs, and that's happening in New York City.
Right. New Jersey is growing a lot because a lot of New Yorkers are moving into less populated parts of New Jersey. So there's a lot of sale activity in New Jersey right now, and Connecticut, upstate New York. It's just, and a lot of Bay Area folks are moving up north to Sacramento and, northern areas. Sorry about that.
Well, hello. I'm so sorry. I had to restart my laptop. I don't know what's going on, either with internet in my office, Comcast, I'll have to call them. But seems like I'm coming from India. I'm not in San Francisco. Welcome everybody. Again, thank you, Kavitha, for joining. Please let me know if you were introduced formally yet or...
Not yet.
We're just chatting.
Okay, beautiful. Let's go for it, And I want to really introduce everybody to my special friend, Kavitha Baratakke, a principal at Cherry Street Investments. She's based out in Austin, Texas, the beautiful Silicon Valley, the new Silicon Valley, which I say that always with what's happening here in the Bay Area, with the engineers moving and the companies moving there and everything. I'm so high on Austin, based in real estate investor and full-time commercial real estate syndicator. She's able to raise money, fund of funds, and all with over 10 years of investing experience in real estate. Prior to real estate, she spent almost 20 years. You're so young. Come on. She spent 20 years as a technology professional working for IBM and Atlassian. As an investor, Kavitha has successfully acquired, rehabbed, managed, owned, and operated several single-family and multifamily investment properties in the Central Texas area. And she's got amazing following guys, of the investors, and she gives so much back to the community, to the youth. We're going to dig into that. And please, before we do that, and please let us know where you're from, and also put in the chat, some questions that we could ask our special guest, Kavitha. Again, I'm in San Francisco. Bo is right there, my partner in crime, right there in Las Vegas, Henderson, and then Kavitha is in Austin. And John is my buddy right there, my VP of the Academy right in the background. So thank you, Kavitha, for coming this morning with us.
Thank you for having me, Vinney. I was so honored that you called me. And although you did tell me yesterday or something, and I'm like, sure, I can do this. I love it. I'm happy to be here.
I love it. Hi, Vish. How are you, buddy? Vish Muni saying good morning. Good to see all three of you. Any other comments coming up? Please let us know. Again, let us know where you are from. We have 16 people watching us right now. So please tell us your name. We want to get to know you more and how we can support you, help you. Thank you so much, Vish, for your comment. And, please put your comments, your, questions. This show is for you. That's what I want to talk about. It's about life. It's about real estate. It's about syndication. It's about taking your business to the next level. It's about loans, because we got the #1 mortgage broker right here in Bo Eckstein. And many of you, those who are listening to me, watching me, Bo got me 15-day close for $8.7 million loan, guys, on a multifamily from start to finish.
Wow.
Hold on. So this is respectable. This is very good. He's very creative, very resourceful. So thank you, 16, 18 people joining. So please put your name and tell us where you're from. Thank you, Kavitha. Yeah, so Bo, how are you doing, brother?
I'm doing well. It's just the weeks are flying by. I think I'm a little stir crazy at home with COVID, but I'm getting a lot done, and I've kind of switched my focus. So I'm actually really excited about today's call, because I've heard wonderful things about our guests today. So I want to take notes, and I want to learn some tips that I can, instead of being the lender, I could be the money raiser and the syndicator, and that's the goal. So I'm gonna get a lot out of this show.
I'm so glad, Bo. You're saying that. Actually, my wife, Kanchan, who is my partner in the business, Monica, our daughter, who is also now VP of Operations, and we were sitting down and looking at how many millions of dollars we have raised. I think $120 million. Our investors have entrusted us with that kind of money, and we have double, quadruple money, and then gone back, brought back, gone back, only with 168 investors. That's all. So I think you can tell that, once we do things right in a good way and respect our valued investors and give them time of the day, I call it, when they call, we stop everything in our company. We cater to their needs, and that's what it should be, not to worry about other things, but take care of what they want to know and have a transparent operation. That's the biggest thing. Our investors can ask for anything, any reports, any bids, any invoices, and being vertically aligned, that helps a lot, because then we are controlling all the things, and having that accounting department right here, with us, 5 people full-time in accounting at the peak we had, that because millions of dollars is going through these assets, and we want to make sure the right amount of money is going to the bank and then going out of the bank into the right, invoicing and authentications and things like that. So yeah, Kavitha, please share with us how you got into real estate.
Yeah, I got into single family like a lot of people. I bought my first single family home in Austin in 2009. Right at the dump, like when the pits of real estate. Wasn't very easy at that time, because I didn't know what I was getting into. It was my first investment, but I did it one at a time, and scaled it up slowly until I figured it out, what being a landlord meant, dealing with tenants, dealing with toilets, all the problems and the joys of being a landlord. So yeah, kind of started there, transitioned into multifamily about 4 years ago. and then transition from multifamily just being a passive for a while and just learning the business for 3 or 4 years, and then moving into the GP role.
Excellent, excellent, beautiful, beautiful. And so how did you feel? Okay, and did you get taught by some coaching, or how did you do it? I mean, what was the steps? If somebody, a brand new person, wants to raise money, let's say, in a legal way. Remember, I mean, where is my book over here? I wrote the book. Took me 2 years to write it. Syndication Made Easy, and you are a great syndicator. So the key thing is we want to do everything correctly. Friends, family and friends exemption, which we call it. You got to have those points with your friends and everybody before you show them the deal. It's so important, right?
Right. I think a part of it was that I didn't really plan to be raising capital. Honestly, I was just looking to do my own deal, buy my own small apartment.
Yeah.
And I spent about a year underwriting. All of 2018, I spent underwriting. I joined a mentorship team in 2017. And anyone wants to move into multifamily and scale up, I highly recommend some kind of mentoring. Mentoring is important because you don't want to make the mistakes that you don't want to learn the hard way. Like, why reinvent the wheel when you can learn from someone that has already made the mistakes, and you can learn from their mistakes rather than make your own, right? Yeah. So I feel like, especially when you're dealing with millions of dollars, you don't want to make a mistake, period. You'd rather cover all your bases before you get into the deal. So I was with the mentoring group for almost 2 years, and I invested passively. I learned I went to apartments, looked at what they were doing, and just kind of like learned putting my own money, but not being the sponsor for a while, right? Being a passive. So for me, that was a learning experience until I underwrote enough. Like, I probably underwrote 100 something properties all of 2018 to buy my own apartment. Ended up buying nothing. It was very disheartening because I ended up buying nothing. I made a couple of offers, put LOIs in, got nothing. So I really I felt very frustrated. And I feel like this is a common pain point that a lot of people share in their journey, is that they try to get in and they kind of hit this roadblock and they feel frustrated and they feel disappointed that they're not making progress. But I think when you look at it from, how Steve Jobs said, you connect the dots looking back. Yeah. I feel like you suddenly realize, oh my God, that was a part of the learning process. Yeah. Doing all this, and even the fact that you didn't get deals taught me that, I didn't establish that broker relationship the way I had to, or I should have, right? Yeah. So looking back, it was all a part of the learning process. But after the first deal is done, I feel like things just gain momentum. It's kind of like the snowball effect, where you talk to someone, they talk to someone, and then suddenly deals start coming in and you start working with multiple people. People know your name. And, so the one thing I want to tell our audience is, if you've been in the stuck phase, trust me, it'll get unstuck. Just stay at it. Just stay at it.
Yes. So glad you're saying that. Hey, Colin Corrington is right there from San Antonio. Welcome, Colin. Hey, if you have some, questions for our guest, please put it down. Wish, if you have some questions, please push it down. And also, anybody watching us, please let us know where you are from and some questions.
Hey, Vinney, Jacob wanted to hear more about, because we're syndicating to multiple channels. For whatever reason, we don't get everybody's comments. So John just texted us that Jacob was interested in learning more about the awesome deal that just recently closed. And then Dave Oliveria, from Boston, I spoke to him yesterday.
No, I'd love to hear. You said Jacob. Hi, Jacob, buddy. Definitely. We just closed the deal on Wednesday. Today's Friday, man. The days that go. Wednesday we closed it, and thanks to Kavitha, because she was able to raise $4 million, guys. I'm telling you, if you start educating your investors, you're able to show them why multifamily and show them why, where you are purchasing or where you are doing fund of a fund. I could kind of go to explain what that means. Is you can raise money legally. Legally is the word, guys, because you want to do fund of a fund where your investors are your investors for life. and they then put the money into the deal that you are joining some other big syndicator, like me or other people, and then you're able to bring whole money as a fund into that other deal. So your investors are actually investing indirectly into the bigger deal, and that's how Kavitha was able to do. So her LLC raised $4 million. I was so proud because she was able to do it within a week, guys, within a week. Hold on. So that tells me that Kavitha knows some very proven systems, right, Kavitha? How you're able to educate and give so much to your investors on a regular basis. Isn't that right? And you have great guest speakers come in and all that. So
Right.
explain to us. Yeah.
Yeah, and I think this kind of came to me when I first started. I got on the GP side and I had no clue how much I can actually raise, how much I can actually do on the apartment side in terms of talking to investors. I was really hesitant to take money from investors because I felt like I'm okay being the guardian of my own money. I'm not okay handling somebody else's money. And I think that's a very common problem that people have initially where they feel like, okay, I don't want to be responsible if something goes wrong. But I think what turned it around for me initially is that the feeling of this thought process that I am doing my due diligence when I get into a deal. I know what it entails. I'm taking the risk for my own money. I usually put in my own capital in all my deals, but I'm also providing a service to another person because that person would normally not be able to. It's an opportunity. It's an opportunity for them to invest into something they normally wouldn't invest in. And if I look at the stock market and where most of my investors have 80% of their wealth in stock market, I'm like, that is so not in their control at all. I feel like this is the much safer,
Yes.
tangible investment that's backed by a real property. So I felt like all my fears kind of faded away when I put it in that bigger perspective. And in terms of adding value, I think for me, it was really important when I started my journey as a GP to think about my target audience, think about who is it that I resonate most with, right? Like I came from a technology background. I was really busy. I started doing these single family homes and discovered that there was so much work for me. It's just so much work for me to manage a job, manage a child. I'm a single mom. And to actually manage all these tenants. Like I had 11 tenants. It was driving me nuts, right? So I started thinking about it as, okay, who is my persona? What is my persona? What is that audience that are my target audience? And what is their pain point and how can I solve it? Right? That's really the big picture of where I came from. And I realized that when I was going through this learning process, I had to jump through hoops to learn, right? Like I had to go to Dallas. I was going to Dallas every weekend, every other weekend to learn. And I felt that from a passive investor standpoint, do they really need to go through those hoops? Can I get that education to them where they are in the comfort of their homes? So that was kind of the driving off point for me.
Excellent. And with COVID happening now, oh my gosh, everybody's on their laptops in their homes. And as the whole habits are all changing, I think online, which I have always felt it, by the way, I never want to do seminars, live seminars. I mentioned it for last 4 years because I feel like we can reach hundreds and thousands of people in giving the education, right, on the internet across the country. See, and across the world, by the way. I mean, that's the name of the game. We got to think big because we could really move mountains all across the globe through the internet, through the platform. So, no, that's great. Bo, you had some questions, bud, please.
No, I was just going to say, I love the fact that the way you positioned it and said you're giving opportunities to these LPs, these passive investors. And I think that's a good indication of like mindset shift, right? Like you're not trying to sell them anything. You're trying to help them and to grow their wealth, right? Yeah. I look at like a lot of my friends that, or I'll just even look at my brother. He's got a substantial savings, but he's never ventured into, he's just stocks and mutual funds, right? Like he knows diversification. He's the guy that needs to be investing into syndications. in real estate because he's made a lot of money in real estate accidentally. So, but some people don't get it, and you just got to kind of put it in front of them and educate them that, hey, it is a good opportunity. You can test the waters. You don't have to put your life savings into the syndication, but test it 100,000, 200,000, what you're comfortable with. And then you could also, and the other thing is you're learning too, right? As an LP, you're getting to see all the documents. You're looking at the properties. You're seeing how they're forcing appreciation through rent bumps and management systems. So I think that's important. And I love that, how you pointed that out. That was really good.
Yeah, for sure. And I think from what I mean, my ideal target audience was exactly who I was 10 years ago. And I said this in another recording when I did. I said 10 years ago, the pain points that I had, like I had the money, I didn't know where to put it. And that's really a big problem for a lot of people. And we don't see it that way sometimes. But a lot of people, when they don't know what to do, there's idle money. There's a ton of idle money, right? And they put it in the stock market, but they feel like, oh, now I've got to watch it all the time because I don't control the market. So I feel like when people think diversification, and every financial advisor says diversification, they're basically like mid cap, small cap, large cap. I'm like, no, it's all the stock market. Where do you have your money outside of the stock market? Like, what kind of assets do you have? Are you collecting tax benefits? Are you paying a ton of taxes? And let's say you're making an average of 10% in your real estate, in your stock market. You're in California paying through your nose for taxes, right? Half your taxes, your tax bill is 50%.
Exactly.
So what are you really making at the end of the day? Like, what's your true return on investment? So all of these are pain points that I saw, and I was like, okay, this is something I feel like I can address for my audience, which was typically people like me in tech jobs, maybe doctors, dentists, business people who are trying to figure out, how am I going to solve this problem? So I think from a money raising standpoint, when you're trying to build a brand, the biggest question you need to ask yourself is, who's your target audience? What is their pain point? How can you solve it? Really, like, boils down to that.
Yes.
Can you kind of dive into like how you built your group, your kind of the people that know, like, and trust you, and what are you doing to stay in front of them and bring more value to them? Because obviously you're doing something right, and it would be great to hear what you're doing.
Sure. So initially I started a meetup group in Austin. I had 25 people the first meetup, I think, or maybe 30 people the first meetup. The second meetup dropped to 10. It was called a purely passive meetup group. I was focusing passive investors. After that experience, I realized that I was renting a room. I was getting all these people together, but passive investors are just not inclined to show up beating traffic at 7 p.m., but they will probably show up online, right? And this was mid last year when I did that. The first two meetups were May and June. And then I took off a month, went to India, came back, and I was like, okay, I need to change this game. I'm going to go online. That's it. I'm not going to do a regular in-person meetup anymore until I have built up my online presence. And so I went 100% online, started doing Zoom calls way before COVID happened, right? And started doing webinars. I think initially I was doing once a month. Then I went to twice a month. Then I went to 4 times a month at some point. But the idea was that essentially people don't have to go anywhere. Education comes to them. And a lot of people will think, education goes to all these people. There's too much education out there. But I feel like if you tailor the education for the pain point that they're experiencing and bring the right people in front of them, you can still add value. So the way I went about it is, okay, if I want to diversify, what am I looking at? Am I just going to talk multifamily all day long? Yes, it's my forte, but I'm not going to do that. I'm going to bring in speakers who can talk about mobile home parks, multifamily, self-storage, taxes. Taxes is a big concern for people. Depreciation, how can it help them? Like cost segregation. A lot of people hear these words but don't know what it means. So for me, it was kind of like if my grandma was to sit there, she'll probably walk away with something. That's really the yardstick of okay, can I understand this topic? Of course, there are some advanced topics and I can't get away from that. But initially, my goal was if someone walks to the table, they understand what we're doing in very simplistic terms and very logically laid out to them.
So
So,
right, so very right, so very right. And you know, having that uniformity, consistency, also like you have this already set up on Thursdays or whatever time, right? You're able to promote it, and the list gets bigger and bigger and bigger, right?
yes.
Yeah, for
Because
sure.
when people feel like it adds value to them, they will talk about it to people, the other people they know, whether it's friends, family. I've had so much word of mouth growth here. It's all been a lot of organic.
Yeah.
And I put stuff on YouTube. I started a YouTube channel. So that also has been very organically growing. I log in one time, I logged in, I'm like 10,000 minutes watched on my YouTube channel. I mean, that's very gratifying. You see progress there because I didn't know what to expect. It was just like, okay, I'm just going to take it one step at a time and see where I land up. So,
Surely, surely. I'd like to answer a few questions just to kind of have it. I know Ashwin Garg is asking what kind of return do you expect to give to your investors, and how long you plan to keep investors' money. Hi Ashwin, thank you so much. Actually, most of the multifamily syndications, I've done 30 of them now, right? For 30, all being principal on the loan, guaranteeing the loan, all that good stuff. And we are vertically integrated. We keep the money, I would say, in the PPM, private placement memorandum, we say 5 to 7 years. Sometimes we have sold the assets even in 3 years, 3.5 and 4 years. But majority of the syndicators like us, we're looking at the trends in the market, emerging market, all that, to buy at the right time and the right place. We have done 22 already sold, complete circle. And I can only give you what my investors have gotten. They have gotten as high as 67% per year. I shouldn't say that's what you're going to get. I want to qualify that right now because markets are different. 40% IRR, 43% IRR, 37% IRR per year. That's per year. 27.9%. We are just doing right now, actually in Atlanta, I'll be giving like 50% return in just like, certain 3 years, let's say, right? Yeah, and plus they have gotten the cash flow and all that. So all those are independent driven, investments. All right. And so answering your question, it's 5 to 7 years. Let's just say that 3 to 5 years, you could say too. In the senior assisted living, which I'm very big in now, our whole time is only 3 years. Only 3 years. So you give the money today, in 3 years, we'll cash you out, or you can do 1031 exchange also into the next deal and the next deal. And we are building luxury senior livings. And if anybody's interested, please do reach out. Text to that phone number right there, 925-766-3518. Or you could email also Vinney@VinneyChopra.com. I know we do this show to really educate people, but those who want to go further with us, you can definitely reach us. Yeah.
I want to address Dallas Wayne's question about apartments not paying.
Yeah.
So I think, Dallas, to your point, there is always the risk. We always make that very clear when we actually talk to investors in the offering memorandum and all our documents.
Yeah.
I think any investment you do has a risk. And the way I look at it, a lot of my investors are in the stock market, where it's definitely liquid, yes, but there's a complete loss of, the market's dropped 50% in one day. The one thing I can tell you in real estate, it doesn't drop 50% in one day.
Yeah.
So when I look at the bigger spectrum of the bigger picture, I still find that real estate is a very solid, slow moving. We are able to see what's going to happen in the market before, and we have a lot of leading indicators when we're in real estate of where the market's going. Also, even if there is no cash flow, let's say it is true that a lot of apartments sponsors have withheld cash flow right now, like from a cash flow, like a distribution standpoint, there are a fair number who have withheld, but it's from a cash preservation standpoint, so that if we hit a rainy day, we can keep the property stable, and we want to hold on to the property and move through the rainy day, right? That's really important. At the end of the day, your money is a part of that property, and we want to hold on to the property for what it's worth through any bad patches. So if there is a loss of, the way I look at it, this is a long-term game when you get into apartments, when you get into these investments, because equity is the biggest part of your return, guys. The equity is, because the equity will far surpass the cash flow most times. Because if the market is an appreciating market and the location's good, you're going to make that back 10 times over. Like Vinney said, 50% returns in 3 years. There are sponsors who have delivered 50% return in a year, but they may not have cash flowed like more than 7 or 8%. But the point is that their back end returns was so high because of these forced appreciation, because of the market, the cap rates in the market dropping every year. Like Austin, I have seen market caps go from 7 to 4.5%. I mean, that's a huge increase in the value of your apartment building or whatever investment you're doing in that market. So we always educate our investors on the risk. We always let them know, but we also let them know that, hey, we are treating this money like your money, like our own money. Like if I'm treating that money like it's our money, not just your money, right? We are in this together, and we are looking for success at the end of the day. Even if that short term means that we have to go through some rainy, hard patches, we do. We hold on to the property. So that's a long answer to your question.
Surely, Kavitha. And also, I want to mention that we have skin in the game, guys.
Exactly.
I mean, as a syndicator, Kavitha, myself, and Bo is going to be a great syndicator. I can tell right away. The key thing is, we want to make sure, and we have fiduciary responsibility to preserve our investors' money better than our money. I mean, that's how my wife and I have operated this business 14 years. And we have so many happy clients and investors and friends, who believe in us and trust in us and everything. Other thing is also, let me just also mention a little bit about stock market. You have to buy Google stock or Tesla stock. You have to pay $2,200. Well, it's a split now, 5-1. So it's about $400, let's say. So $400, you have to pay total money of $400 to buy one stock. In real estate, you get the bank to pay 80%, 70% of the mortgage loan. So bank actually is giving you money to buy this asset, and we are able to leverage, which we can do it in stock market through margins, through options and things like that. But a lot of people lose money also. It's not that easy.
It's high risk.
High risk, very high risk. Hold on. Now you lost in a year $500,000. Guess in stock market, how much can you write off in your taxes? 3,000. I think it's still 3,000. Maybe I may be wrong. But in the real estate, it's amazing what you can do. In real estate, if you lose money due to depreciation, accelerated depreciation, for example. I'm just giving an example. Again, don't quote me, guys, when you email me or like that. But we got last property we bought in Florida, $35 million in December. My $100,000 investor got minus $61,000 on their K1. Hold on. What I just said. I mean, can you show that in stock market? Not at all. Not at all.
And these are paper losses, right? And they're not real losses.
Yeah. Properties making money during COVID. We are collecting 98% of the rents and everything. You're right, Kavitha. But this is the depreciation, and the tax laws are designed for real estate magnates in this country. Real estate owners, to be truthful, let's call spade a spade. They are not designed for the Wall Street losses. They're designed for bigger corporations, yes, but not for regular people.
Right.
So let me ask you a question. If these are like let's say it's a 5-year play, it's a multifamily deal, and you were just talking about accelerated depreciation. So each year, something like that, they might be able to take like, or is that just a first year?
First year. We
First
usually do first year, but if you have, you can carry it over to future years. If you don't use all your depreciation in 1 year, so let's say the first year you make that huge depreciation, you can take that over, carry over the losses for future years.
Exactly.
So hypothetically, year 5, the sponsorship team decide to invite people to 1031, they could actually defer all their tax consequences on almost forever.
No. That's totally different, Bo. Okay. In other words, cost segregation, just in simple terms, if I may explain to the, everybody listening or watching us later, hundreds of people will be watching. It's the whole structure without the land. Land does not depreciate. So we bought it for 35 million. 5 million was the land. That's how we found out. So 30 million, which is the structure, we could straight line depreciate, divide that by 27.5 years in residential, multifamily and residences. So that's a straight line depreciation. Every year you can deduct that much as a paper loss. But we hired a CPA company which are proficient in breaking down the whole structure. Of knobs and cabinets and appliances and all these different things which are permanent, foundation, lighting, all that, the wiring, everything, right? On a 5-year schedule, 7-year schedule, 15-year, and 24.75 years. So 27.5 years. So essentially, we have these segments of larger depreciation amounts. But with Trump taxation, they gave us a bonus depreciation, which is going to phase out, by the way. So that's why we are able to write off $7 million, or something last year in just 1 month. In 1 month, we bought the property on 10th of December. By 31st, because we bought it in 2019, we were able to write off $7 million. Hold on.
Right.
How? So lot of profit has been made in the property, but the paper loss makes it negative. And then we pass down to the LPs 70% of that return into their taxes in the K1, 30% goes to the GP side, huh? Yeah. No, go ahead, please.
Yeah, to add to what Vinney said, so these depreciation happens for different subsystems in the apartments, like plumbing and electrical and foundation and stuff. So what is interesting is that if it's under a 15-year depreciation schedule, because of bonus depreciation, we can all take it in 1 year. But if it's over that, there are some parts of the apartment which are over the 15-year schedule, so you cannot take it the first year. So that's why you get us a chunk of it, which you can take the first year. So it just allows you to have a huge depreciation in the first year.
In the first year. Second year will be there, but not as much, which is true.
So there is a question about depreciation recapture from Ashwini. There's definitely that but that's at sale.
It is. And, let's just talk about that a little bit. I teach all these things, right, in my academy. The big thing is then when you're getting the cash flow, it's ordinary income. It's a passive income. And you are at a 50% bracket in California, let's say 44 or 37% plus 13% at the high for the California tax, right? Which you don't have to pay there in Texas, which is kind of good, or Florida, or Las Vegas. Nevada, I have to say that. Anyway, but the thing is, that's where it's all about. Please don't worry, because you're taking this cash in today's dollars. When the recapture is done, it's at the capital gain stage. And the capital gain might be 15%, maybe 20%. So it's 50% savings there and 15 later on when we recapture it. So please don't, keep that in mind, right? The other thing I wanted to mention was 1031. Bo, you brought it up, right, buddy? So 1031 is with the increase in equity that you're able to defer paying taxes on that thing. Depreciation is different, but that 1031 is different. Yeah.
Got it. That was good. Good clarification.
Good, good, good. And I'm so glad. Let's recognize some great people. Hey guys, please do go ahead and put notifications on. Join Vinny and Bo together on every Friday at 9:30 a.m., which is actually Pacific because we're in the Pacific zone, and it's 12:30 Eastern. Samshir Bahadur, nice to meet you. Ashwin Garg, nice to meet you there. And a lot of other people. I know Dallas was there, all that, and Jacob was there, a lot of great people. So let's talk about a little bit more. What else would you share with us to really? I want to take you there, Kavitha. You are putting so much great knowledge for the youth. So let me take you there. That is something very near and dear to my heart. I know you and I have thought about it also, how we can collaborate and bring to the masses at no cost great education. Yeah.
Yeah. So it started 3 years ago for me. I have a 15-year-old daughter, and she was 12 at the time. And I really wanted to give her some sound financial education, which I feel is missing from education system for most part, right? And there are some schools which are doing some education, but I still feel like it's pretty much scratching the surface of what finances are all about. And for me, it's more about the mindset. And of course, you want to learn insurance, you want to learn all the aspects of daily living for as far as financial life is concerned. And one of the biggest reasons I'm so passionate about this topic is that as a landlord, I have seen so many credit reports that it makes me sad, right? It's horrible. Like, I mean, people make so much money, but they don't keep the money. They don't know how to manage money, right? So that's something I wanted for my own daughter to not have a problem with. So I decided that, she would not really sit down with me at home. So I went to school and I started an after school club 3 years ago. And I was teaching the kids every week about different aspects of finances, including assets, liabilities, stuff that I felt I learned really late. The whole Kiyosaki concept of assets, liabilities, and what are you investing in? Is this an asset? Is it a liability? When you start thinking that, your whole world changes, right? So I wanted to educate the youth about this. And so I started initially in school and I developed a curriculum there. As I went along, I was working full time, managing my properties and doing all of that stuff. Then I didn't have that much time, but I had developed like 12 weeks of curriculum already. Probably superficial, but whatever I could do by myself. So when it came to COVID, actually one of my friends just posted on Facebook saying, hey, what do we do with our kids? Suddenly it's March, it's spring break, and they're sitting at home and we don't know what to do with them. So I thought, oh my God, this is the perfect time. I need to put this out now, right? Like right now. Yeah. But I talked to a few educators, people who actually work with kids, to see if I could format it in a way that was more appealing to kids, because finances can be a dry subject, right? It's like, okay, kids don't care, because I feel like you care about something when it matters to your life, right? Kids are still spending their parents' money. They don't care. I'm like, yeah, my parents are paying mortgage. Why do I care about a mortgage? So that was a challenge that I felt like a resistance that I would encounter. So I talked to a few educators and they felt it was impossible to pull this off within a week or two. So she said, don't even attempt it. You're not going to capture any audience. But, I don't take no for an answer. So I said, you know what? I'm just going to do it. I don't care, right? I had a partner like this lady, Anar Pitre. She was my partner in this education, and she was handling it for the little kids, like 5 to 10, and making things really simple for them to grasp. And I was focusing more on the teenagers because that's what I can relate to. I have a 15-year-old at home. And so I knew that I could gather quite a few people. So I said, you know what? I'm just going to throw it out there. If kids are even retain 10% of what I teach, I feel like I have achieved my purpose. I feel like I've done my bit, and I can continue doing this on a regular basis in the future. So I just threw something together, literally went week to week and developed curriculum from what I had before. I took that as an inspiration and started refining it some more, and started giving them exercises to go home and do afterwards, like homework kind of thing, because it's not enough to just talk to them about mortgage, right? Go talk to your parents about what kind of mortgage they're paying, how much are they paying in interest, those kinds of things. And this whole talk about assets, liabilities, think about it when you're buying something. Is this an asset? Is your toy an asset? Is the toy a liability? And it was just actually was so happy doing it because I got so much positive feedback from these kids. I mean, a couple of my kids started trading in the market. In the stock
Wow.
market. So it was like we covered a wide range of topics, and you can actually find that on my YouTube channel, Cherry
Please
Street
do that.
Investment.
Can you give us the information? I'm so enthused about it,
Yeah.
and love to collaborate with you and just build the wealth building for the youth
Yeah.
academy or something which will be free always around the world. We could
Yeah.
really pass that. I have had that passion for 5 years.
I'd love
Actually,
to.
I was with the youth for most of my life also, so that's been a very big thing. And so anyway, no, it's so exciting, so
Yeah.
exciting.
Yeah, you can find it as money on my Cherry Street Investments. You could look up Cherry Street Investments, and I have a sections for money wise learning. Teens and kids. Kids are like the 5 to 10, and teens are like 11 to 15, 18, whatever, right? I think it's applicable for most people. I've had 20-year-olds who joined. They're like, oh, I learned something. They talk about credit scores. I had a credit consultant come in and
Yeah.
talk about the importance of maintaining credit scores. What are the things you should do to build your credit score? And with these is basic knowledge missing in almost 80% of the population when you talk outside. Like, and I see credit reports, it looks like trash because people don't know what they're doing with their money.
Oh my gosh, you just ignited something in my mind, Kavitha. Maybe you and I should start a StreamYard. We have this platform and we could do a half an hour show for the youth.
Yeah.
I think it would be amazing.
I
Like
love
we're
that.
doing with the 5 channels, 11 channels, I heard we could pass it across and it gets recorded live right there into YouTube channels of yours. I mean, let's just think about it. Yeah.
Yeah, let's do it. I'm
Yeah,
ready.
let's do it. It's going to be so exciting. But let's talk about some more as we are coming towards the end of the hour. What else would you like to share which can really motivate some people who want to get into real estate, who want to raise more money? What would you suggest to them if they say, I don't know anybody?
I'd say network. I mean, you don't need to go, like earlier, you needed to go to events to network. That's how I did it, right? Before COVID life. But I think this is an opportunity for you to network from the comfort of your home. I mean, you can connect with people. I mean, I went kind of out of the box. I actually went to a financial services conference. I went to non-real estate conferences where I connected with a lot of clients because you don't have to go to a real estate conference to meet your target audience. You need
Yes,
to think about where your target audience lives, right?
That's good. Yeah.
Go
very
to
smart.
where they are, right? And talk to them about what you do. And honestly, I don't feel like you need to sell anything. You need to talk to them about what you're really passionate about, what you live and breathe, right? There's no way people are not going to, like, when you talk with enthusiasm and passion as you do, Vinny, you're like so passionate. I mean, it's hard not to draw people in, right? You will draw people in because and they know, and they see the passion inside you. They see the fire. So I feel like if you have the passion, you convey the passion to another person, and you solve a problem that they have. I mean, you
That's
got them. They trust you.
I'm so glad you said that. And you know what? Again, I want to drop in one thing which all of us know that. Ask questions. Ask questions and ask questions. They'll tell you what challenges they are going through. They will tell you their mind, where they are, how you could solve and help them. That's what this world is about, really. I mean, if you want to endear anybody in your family, in your friend circle, I talk in my book about 5-7 circles of influences and all that. But the key thing is to endear them, to let them know I'm passionate to know you, how I can support you and help you. They will be drawn to you. You're right. Yeah. And then educate them, right?
Right.
I mean, and share them with the different places to go or whatever, and share with them how they could form an Wyoming LLC or whatever, and then do the limited liability so that their name is not all over the place, get into trouble with something bad happened in any kind of investments and things, like a lot of different things out there,
Yeah.
right?
I'm
So the
not yet.
one thing I do want, oh, sorry, Bo, go ahead.
No, I was just going to say, I really kind of like took that as, I love the idea of going outside of your comfort zone. Most people, when they go, oh, I'm a multifamily syndicator, I'm going to go to this event, it's with all other people that are syndicating, right? But really, you want to go to events with people with a lot of money that don't know what to do with it, right? So you're going to these financial service events, or maybe like network with CPAs and things like that. Events like that, where they're talking about taxation, where you're getting other people that nobody's fishing for, right? Like you're in a new lake, a new ocean, and nobody else is there, and you just do what you do and connect with people. It's amazing.
Absolutely. Yeah, absolutely. Spot on. The one more thing I wanted to share, which I think is like something that looking back, I didn't realize I was doing it, but there's this book I recently read, and I promise I'm not getting any kickbacks for this book. But I found it super useful. It's called Creating a Story Brand. It's a guy called Donald Miller.
Can you write it out there? I don't know if you
I can type it. Creating a Story Brand, Donald Miller. You can look it up on Amazon. The reason I bring this up is that in retrospect, I wish I had read that book before, but I didn't. But in retrospect, when I looked at how I scaled and how I'm continuing to scale, it's because of the fact that I followed that story brand. He calls it a template, and actually I have it right in front of me. And I was actually entering this for an event that I'm putting together because you want to simplify your brand. You know, it's all about brand simplification. So the thing is, it in very simplistic terms, you have a hero or a character, the main hero of the movie, and that's not you. That's your client. They have a pain point or a problem. You are the guide. The hero meets the guide, and the guide solves the problem for them. And that's really, and then you solve the problem for them and call them to action. You give them a call to action because they don't know, they're lost, they need help. So you are the person, their guide, who's going to call them to action. You're the guide who's been there, done that, and knows how they should move ahead, right? And that's really, looking back, I looked at myself as the guide, and I didn't have the story brand template at all. But I thought about it this way. I was in technology for 20 years. I worked there. I had the same pain point that a lot of my folks who I'm talking to now have. They look at me as someone who, like, okay, she's financially freed herself. She's on the other side of things. How can I get there? So I'm the ideal guide for them, right? Because I was where they were 10 years ago, and now I'm on the other side. So how can I help them? How can I solve their problem? And how can I call them to action? That's really the big picture of brand messaging, in my opinion.
Awesome. Boy, you've just dropped so many gold nuggets in this whole broadcast. And Kavitha, it's such a great thing to have you. We're going to have you back again. I think you have so much to offer. Right, Bo? Buddy?
Oh, yeah. I really enjoyed this. I pretty much listened the whole time. But my big takeaway is one is I'm going to start raising capital because I already have a huge network. But listen to people's pain points more. Create a story brand. And go fishing where others aren't fishing. Those are my big takeaways to put in the show notes, because and those are like invaluable tips, and I really appreciate that. That was good, really good.
Totally. Thank you again, Kavitha. It's such a pleasure to have you, and I'm so excited. I mean, you had 40-some people already who were excited about senior living. And all those last night and so forth, and looking forward to really, going with you all the way and just scaling it up, because we're going to be doing so many investments in 2021. As a matter of fact, just to say to all the audience, real estate is going to be changing. As you know, after COVID, there will be excellent opportunities coming in apartments, in multifamily. And we've gone into now the senior assisted living multifamily. We didn't leave that thing, and hotels, because hotels are also coming, going to come with low price, maybe 30% off, 40% off. We are excited about it, and a lot of great things. So please join us every Friday, and also let us know in the comments below, who would you like? If you know some great speaker, as a great specialist in some particular field who can really make a difference to the audiences all across the world, then please let us know that in the show notes. Like us, share and share it with all the different people that you know so that they can also become a part of our broadcast. We do it live every Friday at 9:30 a.m. Pacific. So put a notification on. If you were me, I like to do even my miracle morning. It's for every day, same time in the morning. It shows up on my calendar. So, that way, just repeat it for every Friday, 9:30 a.m. And we look forward to it, to seeing you next week. Bo, any last comments, buddy?
No, I'm excited. I love doing these calls every Friday because then I get motivated. I think it's good to keep that motivation going. And that's important, right? Like, and just the fact that talking to other people and investors, right? You learn, you keep on learning, and you keep on growing your network, and through Vinney's contacts, obviously I'm meeting people over there, and sometimes Vinney meets people from my contacts.
Yeah.
And the world, and that's how it just becomes like this giant web of people that help each other grow and succeed in the world. And then I love what you guys are doing with the youth, because I definitely think that's, if you look at the youth right now, I mean, that's where everybody should be focusing. That's the key. Is like when I was growing up, if I would have learned how to balance, even the basics, balancing checkbooks, like making investments. I look at some of my friends that are successful that are teaching their kids.
Yeah.
These kids are going to have such an unfair advantage to 99% of the world. But what we need to do is get people out like yourselves out there, giving people some fundamentals, because let's face it, the school system is not helping anybody in that realm at all right now. And so
I love it.
We're going to do something, Vinney.
We'll do it. I'm totally committed to it. Kavitha, you are the ray of light that I was looking for, really. For 5 years, I think we'll do it. We'll find a day where kids can be part of the show, and so forth, where they can listen. Could be in the afternoon, after school time, or whatever. We'll talk about it. Then I also want to announce another thing, Bo, your very good friend and a great success coach, Mario Mazumoto. We are starting a morning show, Mario and I, on Monday morning motivation show that you just talked about. So we're going to be starting that pretty soon. We are getting the intros, outros put together, and the podcast thumbnails and all. And then Mario and I will be cheering a success wealth building show starting on Monday morning. We are still looking at the time.
I think you should do it at like 5 in the morning, though, because nobody's doing it at 5 in the morning.
I'm up, I think that'll be exciting. A lot of people will chime in. You just gave a very good point, Bo. I may have to go into my garage, our new studio, start from there, continue sleeping. No, anyway, but no, that'll be exciting. That's going to happen. We're going to make it happen. So that's 2 more shows coming up, with Kavitha and with Mario. And Bo, I love you, man. And 9:30 show on Friday. So we'll catch the Monday and Friday. And then we do the senior living show on Thursday evening at 5:30. We are moving it to 4 o'clock or something, John, right? We talked about it because a lot of people, are able to kind of get into it at about 4 Pacific. We are looking into that. And then again, our new book is coming out very soon, Investing in Senior Living. And then Bo and us, we are coming up with our 4th book, my 4th book. That's going to be lending, apartment lending made easy. And then we are working on the 5th book and the 6th book. So it's going to be exciting. I think that's what this life is about, just to stretch yourself and never take no for an answer. And at 68, I'm so fired up. I'm telling you, this 68 has really given me more energy, more drive.
Vinney, I have this secret intention of writing a book, and maybe it'll be with you too.
Let's do it. Kavitha, I would love that. Let's talk about, let's teach the youth.
Yeah.
Let's teach the youth so we can make the wealth building strategies for the youth or something. Let's do it.
Let's do it.
You know what's an interesting idea about that? I just want to say this, that I think by doing that, you'll get more investors. Like you guys didn't set out with the intention for that, but right, if you're educating, these parents are going to take note and they're going to start investing in your syndications. And that's going to be probably the biggest source of your capital, because they're going to be like, wow, these people are great, right? And they're like, it's going to educate them without them even realizing.
John, you're right, buddy. I mean, my personal coaching students who are paying me 40,000, 30,000, they're coming from this book. Can you believe it? They picked this book up. They said, who is this dude who has done all this? And now they're my personal coaching students paying me money. And then they are investing $500,000, 1 million, just because they picked up my book. So you're right. It is a power in books. It really is. And it's immortal also. That's the other thing. When we die, which everybody's going to die, but if we can leave the legacy for lots and lots of great generations behind, that's what my real focus is now for the next 30 years. 68 plus 30 is 98. So I hope I'm still alive. My goal right now is my mind. I'm telling me every year I'm getting younger. And when I'm 78, sitting in this desk, because this is our retirement home right here, this is the one we bought. So we're going to live here for life. And then, so we're going to really see 78. I want to be sitting like this, maybe a little more wrinkles on me. But anyway.
Yeah.
Hey,
And I think,
plastic surgery is there. And the plastic surgeon is next door from me.
perfect. You'll be young forever. But I do want to say something that resonated with what you said, Vinney. It's like, it's about creating a legacy. And for me, the whole youth thing it fires me up, because I wish, like Bo said, I wish somebody had told me these things 30 years ago or, 20 years ago. I think the trajectory would have been completely different if I had known what I know now.
Sure.
And I wish that more people can know it. And also saying that when you add value to other people's lives, it comes back tenfold, right? It's just that, what you give, like it's karma, what you give comes back to you.
So very true. Thank you again, Kavitha. This was beautiful, beautiful segment, and the whole, recording, we might be able to splice it up. So many great nuggets you shared with us. God bless you. And let's get going on the book and the broadcast, and just move them, everybody around us, because
I'm excited. Let's do it.
Yeah, let's do it. Thank you again. I'm going to go out with the outro, and we'll see you next time.
See you guys. Bye. Thanks for having me.
Sure. Thank you.
Bye.
All righty. John, are you there, buddy? Let's